Now we look at whether G7 sanctions on Russia are working. Now, these are the sanctions that aim to reduce the inflow of petrodollars, key to financing the Kremlin's war against Ukraine. However, Russia's oil revenues have risen. Here's a report for all the details.
Russia's oil proceeds to the state budget rose almost 50% in May from a year ago. Reason? Moscow's crude prices rose and the nation adapted to international sanctions. Bloomberg reported that oil-related taxes rose to 632.5 billion rubles, and that's about $7.1 billion last month. Total oil and gas proceeds increased 39% to 793.7 billion rubles. The revenue spike follows higher prices for Urals crude, Russia's key export blend. The ministry calculated May taxes based on the Urals prices of $74.98 a barrel, up from $58.63 a year ago. The blend's discount to the global Brent benchmark has narrowed, even amid a price cap imposed by the Group of 7 nations. Western nations want to limit Moscow's access to Western shipping and insurance services while still keeping Russia's oil on the global market. Moscow has adapted to those restrictions, including a European Union ban on Russian oil imports. The Kremlin uses a massive shadow fleet of tankers and sells its oils to Asian clients. Russia's oil revenues last month could have been higher if they hadn't been dented by enormous subsidies to the nation's fuel producers. Even with oil and gas revenues higher annually, Moscow has proposed trimming the total 2024 outlook for earnings from the industry. The downward revision comes as the government projects lower export prices for Russian crude and natural gas for this year. Russian crude is now expected to trade at about $65 a barrel this year compared to an earlier projection of $71.30. Global oil prices, which are traditionally higher than the price of Urals, are now near a 4-month low amid slow demand growth. The risk premium emerged due to the war in West Asia also fizzled out. Still, for now, Russia is winning the sanctions game. Business Bureau, WION World is One.